Welcome to this session from the Skilled MBA Case Study Series, where we explore high-stakes leadership decisions in global business. Today's case, Aleph, a collaborative advantage, follows Gaston Taratuta, CEO of Aleph, as he faces a defining moment. Should Aleph accept an acquisition offer of up to $2 billion or pursue an IPO while maintaining control? This decision not only impacts Aleph's valuation, but also its mission, leadership, and future expansion in digital advertising and fintech. Let's dive into the complexities of this strategic crossroads. Gaston Taratuta and his team at Aleph faced three major options. 1. $800 million offer. An initial acquisition bid that required Taratuta to step down as CEO. 2. $2 billion valuation. A private equity offer with leadership restrictions and loss of autonomy. 3. IPO opportunity. A chance to retain control, grow long-term, but face market volatility. Each option had financial and strategic trade-offs requiring careful evaluation. Several key stakeholders shaped this decision. Gaston Taratuta, CEO and co-founder, driving Aleph's vision and growth strategy. Ignacio Vidaguren, COO and 14-year partner, ensuring operational stability and leadership continuity. Partners and employees, global teams executing Aleph's mission in digital advertising and fintech. Each group had a vested interest in Aleph's future path. Aleph's core mission is to democratize digital advertising in emerging markets with three key pillars: global reach, expanding digital ad access worldwide; strategic partnerships, collaborating with Snapchat, Twitter, and Mercado Libre; fintech expansion, integrating financial technology into its platform. This unique positioning made Aleph a highly valuable company in the digital advertising landscape. Aleph's strength is built on a long-term leadership collaboration, Taratuta and Vidaguren's 14-year partnership, a foundation of trust and complementary leadership styles. Tested by major challenges, acquisition offers and IPO considerations put their partnership to the test. Resilience and growth. Their leadership enabled continuous expansion and innovation despite industry shifts. This collaborative advantage strengthened Aleph's ability to navigate complex decisions. Aleph's key strengths supported its IPO potential: strong leadership team, proven track record of strategic growth, major digital platform partnerships, exclusive collaborations with global tech leaders, proven strategic execution, ability to scale operations across multiple regions. These strengths made Aleph an attractive acquisition target, but also positioned it for independent success. Despite its strengths, Aleph faced key internal challenges: IPO risks versus acquisition offers, balancing short-term liquidity with long-term autonomy, maintaining control while scaling, ensuring leadership stability in a fast-growing business. Managing these weaknesses was critical to Aleph's strategic future. Opportunities, fintech expansion, integrating financial technology solutions, emerging digital markets, expanding into high-growth economies, IPO for independence, retaining strategic control while accessing capital markets. Threats, competition in digital advertising. Rivals like Google and Meta dominate the space. Economic uncertainty. Market volatility impacts IPO success and long-term valuation. Regulatory risks. Advertising policies and fintech regulations vary across regions. Navigating these factors required a forward-thinking growth strategy. Aleph had three viable options. Option 1. Accept acquisition offers, immediate financial liquidity, reduced market and operational risk, loss of leadership control and strategic independence. Option 2. Pursue IPO, retains strategic autonomy and long-term growth potential. Expands global investor base, faces public market volatility and regulatory complexities. Option 3. Hybrid approach. Strategic investment partnerships provide capital while maintaining leadership. Partial liquidity while securing long-term growth. Requires complex investor negotiations. Each approach had distinct advantages and challenges. Several factors influenced Aleph's strategic decision, legacy, and vision, ensuring Aleph's mission continues to shape digital advertising and fintech. Leadership control, maintaining strategic direction without external restrictions. Financial valuation, maximizing company worth while managing risk. Choosing between acquisition, IPO, or a hybrid approach required a careful evaluation of these priorities. Aleph's growth strategy focused on strategic partnerships, collaborating with Snapchat, Twitter, and Mercado Libre to expand digital advertising influence. Market penetration, expanding into emerging digital territories, particularly in Latin America and Asia. Service diversification, moving into fintech alongside advertising to create new revenue streams. Sustainable growth, ensuring a long-term market position through diversified services and global reach. These elements positioned Aleph as a strong global player in digital advertising. Aleph had 3 valuation-based options: $800 initial offer, an acquisition bid that required Gaston Taratuta to step down as CEO, 2B private equity valuation, a buyout proposal with leadership restrictions and external control, IPO potential, an unknown valuation but potentially higher long-term market value. This required balancing financial incentives with leadership and mission control. For Taratuta and Aleph's leadership, this decision was about more than money. Acquisition path. Step down as CEO. Immediate financial gain. Limited future influence over Aleph's mission. IPO path. Maintain leadership control. Potentially higher valuation. Continued oversight of Aleph's strategic direction. Hybrid approach. Negotiate a leadership role post-acquisition. Secure partial financial gains. Balance control retention with external investment. Each path had trade-offs in control, valuation, and long-term influence. Aleph's success was rooted in strategic partnerships with major digital platforms like Snapchat, Twitter, and Mercado Libre. These collaborations helped Aleph expand its advertising ecosystem. Growth in emerging markets. Digital ad spend in regions like Latin America, Africa, and Southeast Asia was rising. Tech-driven expansion, AI and data-driven advertising reshaped industry dynamics. These factors influenced Aleph's decision on how to scale and whether to remain independent. Beyond advertising, Aleph's next major growth area was financial technology, fintech. 1. Digital payment solutions, facilitating cross-border transactions for advertisers. 2. Credit lines for advertisers, helping businesses finance digital ad campaigns. 3. AI-driven budget optimization, using machine learning to enhance ad spend efficiency. 4. Comprehensive digital services, combining advertising and financial solutions for a seamless user experience. This diversification strategy positioned Aleph for long-term sustainability. On. Balance financial and strategic goals. Weigh immediate gains against long-term vision. 2. Value strong partnerships. Collaborative leadership creates resilience during critical business decisions. 3. Stay mission-focused. A company's core purpose must remain central in strategic shifts. 4. Strategic patience is key. Sometimes declining short-term opportunities leads to better long-term outcomes. These lessons helped Aleph navigate a pivotal decision point. To maximize growth while maintaining control, Aleph should prioritize the IPO path, retain leadership autonomy while accessing public capital, strengthen partnerships, deepen collaborations with global digital platforms for market expansion, ensure transparent communication, keep investors and employees informed during the transition, continuously assess market conditions, monitor optimal timing for an IPO to maximize valuation. By leveraging strategic partnerships, fintech expansion, and leadership continuity, Aleph can dominate digital advertising while maintaining its long-term vision. Thank you for joining this session of the Skilled MBA Case Study Series. We now open the floor for questions and discussion.